Hello everyone and welcome back to the channel. It's been a while since I've uploaded any content to my YouTube channel, so just be patient with me. So if you're new to this channel or came across this video, please do subscribe to this channel. It does help with the growth and the journey. I'm going to be tracking my journey as a trader, as a professional trader. And I want to see where it goes, if I'm able to inspire or make an impact or even help someone else with the content that I upload. That is my goal, it's my mission. So, again, giving God the glory, everything that I do. So, again, I want to go over the strategy that I use for trading. And it's very simple once you apply these rules, and it could get very tricky at first, but with time, with practice, you can also develop this skill. So again, we have this price delivery pictogram here, or system that ICT has in his old content. So if you go to his YouTube channel for more in-depth training, for more in-depth teachings, go to his old content. We have the 2016, and obviously we have the 2017, and also the rest of the content as well is great. But the one that I really liked is older content where he really talks about the market maker model itself. So that's one of my favorite models that I like to trade, and it's been pretty successful. Now I want to make a transition into the larger time frames. I'm currently trading on the 1 minute, but the reason why I wanted to make a transition to the 15 or 5 minute time frame is to find a system that works around a 9 to 5. Yeah, so I don't want to interfere with my schedule. So for those who do have 9 to 5s, this is a great way to go into the 15-minute or 5-minute time frames. Why the 5 minute? Because if you can't see an entry on the 15, then you want to go down to the 5 minute to be able to spot a good entry point on the 5 minute time frame. So again, 15-minute time frame. This is one of the trades that I've been looking at, and I did enter also one of these trades. So I'll break down how I identify the different stages of this price delivery system that ICT teaches here in his older content, and also the market maker model itself. As you can see, this is a nice, this is the left side of the curve of the market maker model, and then it goes into some distribution. So first of all, we always start with consolidation. So using this price delivery picture here, we always start with consolidation. Then we go into an expansion, retracement, or a reversal. So identifying these two will take time, because a retracement it's retracing to a certain level, right? And then reversal, you'll see the difference between a reversal and a retracement. And if you want to get more in depth on what all that entails, obviously you have to do your own research. But again, here in this video is just showing you guys what I do and how I trade. Later on, I may go into a little bit more deeper on how to identify these two and how to distinguish the difference between these two, the retracement and the reversals. So this is more of an introduction of how I trade and how I use this model and how I identify as well. So in my next video, for sure, I'll go more in detail. But again, if you want to learn it from the creator of this system, go to this channel, ICT. Definitely recommended. All right, so we always start with consolidation. So here in this London session, because I have it, I had this indicator that helps me identify the different sessions. So here in London, we have a consolidation that took place. Then we expanded. This is the expansion move. in New York. After the expansion, obviously there's a nice reversal. Not much of a big reversal, but it did cut through the expansion move itself. Hold up. Sorry, I had to pause for a few minutes just because I had to make sure that I was looking at the data correctly. So we have the consolidation, expansion, and then reversal because it cut through the midpoint of this expansion move itself. From here, in the middle of the AM session leading into the PM session of New York, we go into a consolidation again. In this consolidation, we had a nice market structure shift. So we had this high that formed in the PM session of New York. Let me just change the color on this to white. Oh, you can't even see it at all. So let's try black. It's better. It's just, you're able to see it better, more defined. And then we have another low that just formed here and the higher high. That's that market structure shift. So this high took out the liquidity out of this temporary high, and this equal highs here. Price then displays lower, taking out the temporary low, retraced into a PD array off of this placement, respected the midpoint of that fair value gap, and then finally expansion move to the downside. Because again, after a consolidation back to the image itself is an expansion move always. It doesn't go consolidation reversal, or it doesn't go to retracement. First consolidation, then expansion. From here, on this expansion, this was a move that formed in the Asian session macro. So after 7 p.m. all the way through 9, you want to be able to catch an entry point through there and then set your stop loss either above this higher high or just above the wake of that PD array that formed here. So that alone, this is a solid $280 loss. Again, you want to make sure that you also manage your risk accordingly. You have the stop loss, and then you have a potential gain of $1,800. Obviously, if you would have held this trade overnight. Again, if you work in the day, in the morning, obviously, you're going to hold the trade overnight, wake up in the morning with a potential gain of $1,800 or so. This was an immense move, targeting the sell side liquidity that formed here on Wednesday on 4 p.m. So that was the ideal target in a beautiful market maker sell model here. So again, going back to the core content itself, ICT breaks down the market maker model, and it is one of my favorite models, to be honest with you, just because I'm able to identify the patterns pretty easily, and with time, with practice, and just doing that, I've been able to get better and better at it. So after this delivery, this expansion, price formed a retracement. This is a retracement because it didn't even really reach the midpoint of this expansion move. It stayed below it. So I classified this as a retracement. And then after the retracement, we go back into a consolidation. Again, if we drop down to the 5 minute or 1 minute, this could have been easily an expansion, reversal, and so on this smaller time frame, right? But then you can also run the risk of getting chopped out with all this right here. So one of the things I really liked about the larger time frames, you can avoid all of this chop, and staying on the 15 minute just makes things a lot clearer and a lot better, in my opinion, right? And I'm looking into transitioning, but I want to train my eye to do this on the 15-minute time frame. So here again, consolidation, and then we go into a expansion move. Here in this circle, this is the smart money reversal, obviously from a market maker buy model. If I drop down to the 5 minute, you can see that there's a there's a market structure shift within this circle. So I'll drop down to the 5 minute time frame. That way you guys can see that real quick. Okay, you see the low that formed here, higher, not a higher high, but it's a high, temporary high, lower low, a nice breakaway gap here, another PD area that formed above it, and price took out this high, this temporary high, retraced into that fair value gap, respected the midpoint, a nice formation of these candles, I believe it's an order block, and then finally exploded with this reversal move in the late PM session of New York. Exploded, taking out the liquidity that was resting all in this consolidation. Beautiful price delivery here in this late session. So again, it's going to take time. If you're transitioning from a 1 minute up to a 15-minute, it's going to take time for you to develop that patience of waiting and identifying the patterns that form. Just because it feels like time moves a lot faster on the 1 minute than going up to the 15-minute. It's going to take a little bit more time and patience for you to wade through all of the AM session and then finally seeing it form in the last macro of ICT's teachings, right? So again, it delivered beautifully into that buy side liquidity. And then again, finally, again, in that Asia session, price started trading sideways. That is the consolidation, and the cycle repeats over and over again. Out of this consolidation, price finally breaks out. Beautiful expansion move. And then we have a nice market structure shift. We have the high, the low, higher high, the break of that structure going into a reversal in the AM session of Thursday. Beautiful reversal to the downside because it cuts through the midpoint of that expansion move and then goes back into that liquidity that was resting below. And this is again a market maker sell model. So again, back to the core content, which I really love. That core content is just beautiful. Here I still haven't completed the whole move itself. Or identifying all the stages. But again, in my eyes, this is the consolidation. We break out of it, the consolidation, and then it is an expansion move to the downside, a retracement back to the midpoint of the expansion. And then all this chop here, this is obviously a consolidation. Consolidation, and then finally an expansion to the downside. See how beautiful it is to identify these market maker models. We have that beautiful expansion, and if I drop down to the 5 minute, there's going to be a market structure shift somewhere along here. So let me go ahead and do that. Let me add a circle there so we can easily identify where we at. Change the color to a pink red so I can distinguish the two ones that I have. So again, we have a beautiful market structure shift. We have a low, the higher high, the lower low. The break of this temporary high retraces into a fair value gap. If I drop down to the 1 minute, if I want to get more defined with it, then caught this beautiful reversal up into, leading into, obviously, you would have probably not catch this full move because the market closes temporarily for about a good couple of minutes and then reopens back at 5 p.m. because of the leading into the Asia session. Obviously, if you want to enter in the Asia session, you can just manage your risk here, enter here. This is actually a pretty good solid trade to enter in Asia because that would have been the entry point. A little bit too much risk if I want to place my stop loss there. But I would probably move my stop loss here at 100 points. And then from there, extend it out to the next session. And just hold it overnight because it's you are entering Asia. Just holding it. Boom. And this beautiful trade. So back to the 15-minute real quick. The only thing about holding a trade throughout Asia is just knowing and trusting that the trade is going to go in your favor. Because right now, this is obviously the expansion, and then we have that reversal move. This is the beautiful reversal right here. These are the moves that I want to be able to capture throughout Asia. So if I'm able to capture this move in Asia, that'll be perfect. So 6 p.m. As soon as 6 p.m. comes through, there's an imbalance here. So as soon as you see that opportunity to enter, this is what where I would enter. Okay, so let me just expand this a little bit higher. Or let me just widen this up so you can see the data a little bit clearer. So this is the 6 p.m. candle. And we have the 4:30 and then the 4 p.m. So in here, we have a nice fair value gap. Let me use a FVG, okay. And you can see how this wick from the 6 p.m. candle that formed tapped into that fair value gap. So that to me tells me, hey, this is bullish as heck, bro. Then we have an inverse fair value gap here. Inverse fair value gap, and price respected it, 615. Does it? You have two confirmations. You have this and this confirming the upside potential. Again, the risk there alone is not even that much, so you can move your stop loss here and just trust the system that is going to play out, because we have all of this buy side liquidity. We have these relatively equal highs. We have two highs here. They're just too clean, and this is more than likely it's going to deliver. So holding a trade overnight is kind of like, oh man, I hope I go. But as soon as it goes into profit, obviously you want to move your stop loss and profit. Or if you want to risk that whatever $50 or $100, again, just trusting the system. Let's say if I go, okay, 1 micro, obviously I'm going to be trading only 1 micro. Move my stop loss here is about a $200 loss with a potential gain of 1,000. But obviously waiting for these confirmations, right? You want to make sure that the fair value gaps or an inverse fair gap isn't. I mean, you don't have to let the trade ride out through the session, but it's totally completely up to you. You want to swing it in Asia all the way to New York, that's perfectly fine. But the whole purpose of this strategy on the 15-minute is to be able to work around your schedules. This is what I'm trying to develop right now, or to train myself to trade around these times. That way I don't have to worry about it in the morning. That way it doesn't interfere with other things that I'm doing. But if I'm able to successfully trade this way, the market maker model on the 15-minute time frame, that would be great. And I'm not going to try it on my funded accounts. I'll probably test it out on an eval and just go from there. And I really don't want to waste my time on a demo account, so I'm just simply going to test it out on an evaluation account with training with 1 micro and just going from there. Because if I do pass the account trading this way on a 15-minute, then it's worth my time because I'm not wasting it on a demo account. I mean, an evaluation account, you pay what, $60, and you're good. If you pass it, then wonderful, right? So again, it's something that a new trading approach that I'm testing out. So again, if you're interested to trade this way, just simply just look at the watch the content that ICT has, or if this video itself is helpful, then great. That's my goal, right? To teach you and show you how I trade using this ICT price delivery. Again, it's pretty self-explanatory. You just have to be able to analyze the data correctly and just take the time to do that. And look for these confirmations. I do have this indicator in place, but I really don't have it there for a reason. It's just I was working on something, as well. I mean, have all of these other indicators as well, but they're not there for any reason. It's just, as a matter of fact, I'm probably just going to delete the indicators and just trade only the price action itself, which I already do anyways. But let me just remove it. If you're curious, the only indicator that I really want is this AMD indicator. Where's that? And that's just to identify the different sessions, the accumulation, manipulation, distribution. But I use it as to identify the different sessions throughout the day. Let me put it back on. There you go. All right, so that's two good examples, and not cherry picking, obviously, because I can go throughout all of this other price action here and easily identify what price is doing there. What I'm noticing here, depending on how price opens in Asia, this could be the market maker buy model. So there's a very likely. Let me check out Bitcoin, how it looks. Okay, so it's a possibility that prices may jump. The market is still red, but from what I see, here, based on this information, we have a consolidation here, and I'm going to mark this out right now because that way, whenever the market opens, I know what I'm doing. We have a nice expansion. And then we have a reversal, a pretty steep reversal. Okay. That's the reversal. And then we lead into a consolidation again, expansion, reversal, consolidation, expansion, probably a retracement, and then continuation to the upside, taking out this buy side liquidity here. So this is already printing a pretty solid market maker buy model. I'm not too sure if we're gonna, because we have some relatively equal highs here. So this potentially a potential target in the near future. So it all depends on how the price opens. That'll be more data, more to be able to know what my next move will be trading this way, right? So I'm probably going to give my 3 funded accounts a little break. I'm going to purchase a new evaluation to test it out on the 15-minute time frame, and then I'll post the results of my trade and updates and so on this trade. So make sure you guys give me a follow, subscribe, and like this video. So I'll see you guys in the next one.